Well, I was curious, Art, when you said that is, you get a better rate. I was looking at your current loan amounts or loan rates on your homepage, and it's like so if I just go get a HELOC, not the fixed rate HELOC, but if I just get a HELOC, that's under 7%. Will a commercial loan compare with that, or is it going to be higher? Like you said, I'm going to pay a premium because in the world of commercial loans, this is kind of a little loan, so it's kind of a higher risk, I guess. So I'd pay a higher fee.
Well, yeah, exactly. I mean, the rate you're going to get on on a commercial loan for an office condominium unit is probably going to be more comparable to a HELOC rate.
Mm.
And of course, remember, in terms of this particular question, taking equity out of my current free and clear home, a lot of folks would look at, if they're in that position, they'll come to us and say, and I've had this happen actually multiple times recently. They'll come to me and say, well, I own this property free and clear. I want to access the equity. I want to get a HELOC. And I'll, of course, respond to that and provide them the numbers. But I'm always quick to say, well, wait a minute. Understand that when you have that free and clear home, you've got multiple options here. You don't have to take that money out in the form of a HELOC. You might want to consider just getting a first mortgage instead of a HELOC. And they're going to say, well, why would I do that? I want to use it and reuse it and, draw against it, pay it down, draw on it again. Yeah, there is that flexibility. The trade-off, though, is more or a higher rate. In this case, this particular scenario, this person has a specific need. They have a fixed amount of money they're trying to access to then move it over here to this other transaction and buy this commercial condominium unit. So that's, in my mind, less reliant than on the need to draw against this loan instrument after you pay it down in future years. You have a specific need, specific amount of money, you want to complete this specific purchase, and you're done. Well, with that being the backdrop, you're almost always going to be better off refinancing with a new fixed term, fixed rate refinance loan, not the HELOC, if for no other reason the rate's better. Again, we could probably do one of these at right around $599, especially if you're under 60 LTV on that residential refi purchase or refinance cash out. If you've got a good credit score,